Let's talk about commodities now, where we have seen an upswing come back. The data in the recent days has been good, and the dollar also has slipped from that 80 mark, which was a one-month highs, and that also seems to be supporting the commodities right now, especially for crude prices, where you have seen the fundamentals also coming in strong. There are bullish statements coming in from OPEC and EIA, and that also is supporting. So 97.5 back in case of the NYMEX crude prices, and the Brent crude prices is just few inches away from 119, a good 0.25% of a rise coming in for the Brent crude prices as well. It's good going in the base metal space as well, even as most of the Asian markets are not participating. You have seen gains come back into that space as well. Let's get in then. Biren Vakil, he's commodity consultant, Paradigm Commodity Advisors, and he joins us on the show from Ahmedabad. Biren, hi, welcome. Let's start with crude first, and the kind of gains that the space has continued to see. What's your sense? Where could we be headed before this weekends?
I think momentum is up, funds flow and fancy is on bull side, and recent attack on Turkey-Syria terrorist blast is also highlighting the ongoing geopolitical risk in Middle East Asia. So I think if market crosses 100 barrier, there would be delta neutral hedge buying from option writers, and we may see a little bit uptick towards 105.
Biren, also, what's your sense coming in for the precious metal space? Because even as there has been positive data for many sessions now, gold prices actually have turned negative for 2013. What kind of levels are you working with? I think bulls, gold bugs are a little bit low here, and I think downside risk still higher compared to upside potential. So I would be prefer to be on short side on any shallow rebound. Would you say the same for silver as well, because that also has continued to give up much of its gains in this year?
Silver is broadly a choppy market, but it is bouncing back from the 30 level, and since it's high beta commodity and metals are really, I think silver may outperform gold a little bit.
Let's talk about the base metal space. While much of Asia is shut, the recent data from China has been supportive, Biren. Would you think that would be supportive enough? The corporate earnings, the strong data consumer, the business numbers from US also have been on the positive side. But coming out talking about copper at $8,000 per ton on LME, how would you want to trade that one?
I rely on US numbers, but I doubt Chinese number, because numbers are too much rosy, exports especially are too much rosy, but it doesn't reflect in the import numbers of its trading counter. As long as metals are concerned, I think fancy and momentum are up, and there seems to be a fun play since there is a backwardation in zinc and lead, which is above 50% of the marked inventory. So I think till China is closed, there really may continue for a week. And if follow-up buying from China doesn't come, we may see a shake-up.
Sure. What kind of levels would you be looking at something like a zinc or lead, especially zinc, where you have seen 17-month highs come back into the markets, and lead price is also doing quite well? Which one would you want to choose, and what are the kind of levels you're working with?
Both looks good, but my bet would be on lead, because market is little in backwardation, and zinc I'm not pretty convinced, but I would go long in lead around 129, 129.50 with upside objective 133 and stop loss 127.
All right, that's about the non-agro space, but let's talk about the agro commodities. The inflation numbers are due tomorrow, and markets have seen very high agro commodity prices continue in Indian markets there. Biren, let's start with the edible oil space first, and there have been a couple of policy changes. Markets are expecting some more moves to come in sense of policy from budget as well. But the USDA report also has been a very remarkable number that has come out from that one as well. How are you reading it all?
Market is in chronic backwardation, especially soya oil, and huge inflow is coming in pipeline as well. So I would be preferred to be on short side, especially in soya oil. I would short soya oil, March contract around 704, 705, upside stop loss is 709, and downside objective 690, 692.
Viren, so while the soy oil prices have continued to decline, soybean seems to be into some consolidation zone after the kind of correction that we have seen on the downside for that one as well.
Market here is in backwardation, but I think farmers selling is reluctant and arrivals are dwindling. So here my bet is I would reluctant to go short, and my bet is to go short on soy oil rather than on beans.
All right, before we talk about any more commodities, there are those IOC third quarter numbers flashing on your screens where PAT is showing at around 332 crore rupees there. So strong set of numbers coming in onto that one into the markets there. Let's also get the stock up for you. 1.5% of a gain coming in for that one as well into the markets. Only one number available on your screens, PAT as of now, and the stock slightly reacting to those numbers in the markets there. Viren, coming back to you then, and how would you look at the other commodities, especially cocoa? We don't get too many strategies and not too many people follow that commodity, but do you see a good money-making idea coming in for that?
I think it is less crowded, so that's why I picked the cocoa. I prefer to buy on dips around 13, 20, 25. Stop loss would be a tight stop loss, 1308, and upside objective 1350, 1370.
Viren, let's talk about some essential commodities as well, and we have seen a bit of a turnaround come in case of the wheat prices. Those are trading on the higher side. Can't say the same about chana because that has been very choppy, but between the grains and pulses, where are you looking at more bullishness continuing?
Recently I conducted an extensive farm survey in Rajasthan, and I'm a little bit seeing government numbers and private traders number are differ in mustard as well as chana. I think chana fasal may be delayed because of rains and delayed harvest. So I think modest uptick might be seen in chana.
Sure. Viren, one word on wheat from you as well, because the procurement from government is expected to be on the higher side. The states are giving further bonuses as well, and this market also is awaiting some policy action coming in from government. So amidst all these three factors, where do you see the prices heading?
I think 2013 belongs to wheat, and wheat seems to be dark horse since MSP is including bonuses 1350, and current market is in backwardation if we talk about NCDX. So I think a negative carry reverse arbitrage kind of thing, a trade could be financed by negative carry charges. I see significant upside from the futures perspective, say 15 to 1500, and downside is limited to 1200.